For most of us, the world of investing feels like a private club, something reserved for the wealthy, the experts, or the lucky few. You see the complicated charts and hear the confusing jargon, and you tell yourself, it's just not for us. You don't have enough money to even get started. But what if I told you that the key to unlocking your financial future isn't a massive inheritance or a lucky stock pick? What if it's just a plan? A simple 5-step blueprint that anyone can follow, even if all you have to start with is $100. Stick with me for the next 10 minutes, and that's exactly what you're going to get. Step 1. Define your destination. Before you ever put $1 in a market, you need to know why. Investing without a clear goal is like driving without a destination. You'll burn fuel and end up right where you started. A vague goal like, I want to be rich, isn't a goal, it's a dream. We need a concrete target. Your goal determines your timeline, and your timeline dictates every single choice you make. Is your goal a down payment on a house in 5 years? That's a medium-term goal. Is it for retirement in 30 years? That's a long-term goal. The strategy for those two goals is completely different. And in just a minute, we're going to cover exactly which accounts are best for each. So take a moment right now and write it down. Be specific. Retirement at age 65. Kids' college fund in 15 years. This isn't fluff. It's the anchor that will stop you from making emotional mistakes later. It's the why that fuels your discipline. Step number 2, choose the right account. Okay, you have your goal. Now you need the right container to hold your investments. This is your investment account, and choosing the right one can save you tens or even hundreds of thousands of dollars in taxes down the road. For beginners in the U.S., there are 2 main choices. By the way, if you find this kind of direct breakdown helpful, do me a favor and hit the like button. It tells me I'm on the right track with this content. First is a taxable brokerage account. Think of this as your flexible investment workhorse. You can open one at major firms like Fidelity, Charles Schwab, or Vanguard. You can contribute as much as you want, buy almost anything, and withdraw your money at any time. The catch? You have to pay taxes on your profits, or capital gains, when you eventually sell. Second, and this is the one most financial experts recommend you start with, is a Roth IRA. This is a retirement account. With a Roth, you contribute money that you've already paid taxes on. But the magic is that all of your future growth and all of your withdrawals in retirement are 100% tax-free. There are no limits to how much you can contribute each year, and you can't touch the earnings until retirement age without penalties. So, which do you choose? A simple rule of thumb. If your primary goal is retirement, start with a Roth IRA and contribute as much as you can. If you've already filled up your IRA for the year, or if your goal is a medium-term target, like that house down payment, then a standard brokerage account is your next step. Don't get stuck here. Just pick one and open it. It takes 15 minutes online. Step 3. Select your first investment. This is the step that paralyzes everyone. They think they need to spend hours researching to find the next Amazon or Tesla. I'm telling you right now, you don't. The single best thing a new investor can do is buy the entire stock market. And the method for doing this is so simple and so powerful, it feels like cheating. You do this by purchasing a broad market index fund ETF. Let's break down that phrase. An ETF, or exchange-traded fund, is a simple investment you can buy and sell like a stock, but it holds a basket of hundreds of different stocks. An index fund is a type of ETF that automatically and passively tracks a market index, like the S&P 500. The S&P 500 is simply a list of the 500 largest, most profitable public companies in America. When you buy an S&P 500 ETF, you instantly own a small piece of all of them. Apple, Microsoft, Amazon, the works. You get instant diversification, which dramatically lowers your risk. Some of the most popular, low-cost S&P 500 ETFs have stock tickers like VOO, IVV, or SPY. Another fantastic choice is a total stock market ETF, like VTI, which holds thousands of U.S. stocks. With $100, you can buy a fraction of a share of one of these and instantly become a diversified owner of the U.S. economy. Step 4. Automate your system. Do you want to know the real secret of successful investors? It's not genius. It's not luck. It's being relentlessly consistent. The best way to guarantee consistency is to remove yourself from the decision-making process. Set up an automatic transfer from your bank account to your investment account every single week or month, right after you get paid, even if it's just $25. This discipline is known as dollar cost averaging. It's a powerful concept we'll break down in a future video, but the core idea is that it forces you to buy consistently when the market is up or down. It removes emotion and it turns investing from a stressful decision into a boring automatic habit. And in investing, boring is beautiful. Step 5, be patient and do nothing. This sounds easy, but it will be the hardest part of your entire journey. The stock market goes up and it goes down. That's normal. You will see scary headlines and your account balance will fluctuate. Your job is to not react to the daily noise. Your job is to remember step 1, your long-term goal, and trust the system you built in step 4. You're not a day trader. You are a long-term investor. You're planting seeds for a forest that will grow over decades. Don't pull up your saplings every time there's a storm. Time is your single greatest advantage. Let it work for you. And there you have it, the blueprint. Define your destination, choose the right account, buy the whole market with a simple ETF, automate your contributions, and then have the discipline to be patient. That is the entire plan. It's simple, it's proven, and it's waiting for you to start. If this blueprint clarified things for you and you're ready to take control of your financial future, then subscribe to the Financial Compass. We're going to be your guide for every step of the journey. Our next video will break down the #1 mistake new investors make, and you're not going to want to miss it. Thanks for watching, and we'll see you on the next one.